Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia's strong revenue forecast soothes investor concerns about an AI bubble. Our exclusive conversation with CEO Jensen Huang.
Plus, the CEO of Palo Alto Networks joins us to discuss its own results and the latest acquisition to boost its AI offerings.
An AI pioneer, Yann LeCun, will depart Meta at the end of the year to start a new company. Details later this hour.
Now we focus in on the broader markets. We said yesterday, so Nvidia, so the market follows Nvidia higher. But we're up 1.7%. The Nasdaq 100, a breath of relief when it comes to AI anxieties. Instead, those are quelled a bit, Ed. And not enough even to be shaking off some of the anxiety that comes with the jobs report that maybe we could see a December rate cut. We built up a little bit the bond market pricing in now 35% chance of a rate cut come December. But really all eyes on this AI trade today.
And all eyes on Nvidia. The stock is up about 3%, had opened up about 5%, and has pared some of that gain in the last half hour or so. $65 billion of sales in the fiscal fourth quarter. Many see that as being healthily above consensus. There was a lot of fighting talk on the demand side, on the supply side, and how good Nvidia's technology is. We spoke with Nvidia's CEO, Jensen Huang, in an exclusive interview post-earnings. Take a listen.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world, but we've got a bunch of Blackwells to sell.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is zero. All of our forecast, the guidance that we showed, zero. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Nvidia CEO Jensen Huang speaking to us exclusively last night. Look, let's dig in to that last bit from Jensen and addressing concerns around selling to the Middle East, selling into China. Bloomberg senior editor Mike Shepard can break down what is currently happening at the White House level. There's a pressure on Congress in particular to allow Jensen Huang and Nvidia to have greater access to some of these so-called adversaries. What are you hearing?
Well, what we're hearing is that the White House would like Congress to hold off on legislation that would force Nvidia to put American customers first ahead of adversarial nations like China. And of course, Nvidia is proscribed from selling to China right now by U.S. export controls and even by Beijing rejecting those H20 chips that we've talked about that have won American authorization to be sold inside China. Nvidia has been looking for permission to do more. And that includes selling a deprecated version of its market-leading Blackwell chip to China. Jensen Huang sees being able to compete in China as key to being able to compete around the world. But this measure is seen as really putting the handcuffs on Nvidia and on AMD as well. And both companies have moved against this. The bill is called the GAIN Act. It would be attached to a piece of legislation that's must pass. It governs defense policy, and it has bipartisan support. But now the White House is weighing in and seeking to get it pulled from the legislation. And it's unclear what would emerge in its place, because right now, Carol, there really is no uniform code governing export controls, especially as applied to China. And that's because if we go back all the way to the beginning of the year, and it seems so long ago, the Biden administration had tried to impose this AI diffusion rule, this framework that would prevent tech from leaking from allies like Saudi Arabia, like the UAE, to China. And we don't really have anything here yet in place in Washington. So you see the China hawks on Capitol Hill and even inside the administration grasping for an alternative. And this bill, which the White House is now trying to head off, is at least an attempt at that.
Shep, last night was a little bit an issue of timing and chronology. So during the call, the analyst call, the Commerce Department put out a statement confirming that Nvidia is now allowed to export Blackwell to the Gulf states. Is that just kind of rubber stamping something we knew was coming?
We had widely expected this approval to come through, but it does take some time to work its way through the guts of the bureaucracy. But there is also a hurdle to overcome, and that is the concerns, as we just discussed, that the technology does risk leaking to adversarial nations, especially China. And that is because both the Saudis and the Emiratis have had longstanding business ties with China. And China's Huawei Technologies has a footprint in each of those two nations. And the concern is that the proximity of Huawei to American technology in a data center creates a risk of some sort of leakage, either through software or something else. And that is something that the U.S. government was really trying to seek assurances on. We don't have details on what was required of the Emiratis and include also of the companies. And you did your best in asking Jensen for specifics on that. But he really dug in on the whole broader question of diversion. And that is something that the company has been sensitive about. They have insisted that their Know Your Customer programs have done enough to prevent diversion. And yet that hasn't assuaged all the concerns of China hawks here in Washington that advanced American technology could eventually leak back to China and somehow support its military and intelligence bureaucracies.
Bloomberg's Mike Shepard, thank you very much. Let's get back to the Nvidia and the earnings story. Aoka Yoshioka is Portfolio Consulting Director at Wealth Enhancement Group, $124.5 billion in assets under management, and a pretty healthy chunk of Nvidia shares as well. I feel like Jensen Huang was trying to give the trifecta, a positive picture on demand, positive picture on supply, and he even had the opportunity to kind of throw a bit of shade at ASICs or Google TPUs, saying that customers looked at alternatives and they came back to Nvidia. There was a lot there. What is the most important data point to you?
Hi, Ed. Good to see you. Perhaps maybe the most important one was that Jensen wasn't wearing his signature leather jacket. But for the most part, for us, when you look at the financials and when you look at the growth rate that Nvidia has posted and really delivering beyond expectations for where consensus estimates were, that was the most important metrics for us as we listened to the call.
What I tried to do at the beginning of the conversation was get a sense of how supply constrained they are and how conservative that $500 billion forecast through the end of next year is. Let's start there. Listen to this.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells. And we have a bunch of Vera Rubins coming. And so business is very, very strong.
Is that $500 billion figure, which excludes China and is Blackwell Rubin through the end of calendar 26, a bit conservative?
Well, we heard analysts ask that question, right? And they have visibility into that $500 billion number. And so that doesn't include sort of the demand that will be coming forward in the next, 14 to 18 months. And so it perhaps is conservative. And I think that's the part that's so difficult for all of us to really wrap our heads around. These numbers are so large and they're growing at such a rate that we haven't seen before, that it really becomes, for most of us, we're all skeptical that this is going to happen at the rate that it continues to happen at.
What was interesting was the depreciation question was tackled. This is what's got Michael Burry in a tizzy. It's got what many have been seeing as a little bit of anxiety, that ultimately the consumers of Nvidia chips have been saying, look, these last longer than some had anticipated. But really, it was made clear that the A100s, the older type of chips, are still working 6 years on Ioka. Did that put that anxiety to bed?
Yeah, I think it was a great way for Colette to sort of clap back at that depreciation argument. We are still using these older chips. They are still getting consumed simply because the demand is so great. So I do think there was a little bit of that was put to rest, and a relief, I think, from investors to a certain extent that they were still being utilized to that extent.
There's a relief today, and we are up 2 percentage points, Ioka, but I feel as though the entire market is a bit of an anxious boyfriend at the moment, trying to have soothing words currently given to it from whomever they can class as their AI girlfriend in many ways. But what are you thinking of in terms of that this will soothe for the longer term? Are we going to need weekly updates that we're not in some sort of bubble?
It is really difficult to sort of wrap our heads around. I think on one hand, we do see all of the demand continuing to grow at these exponential rates. But on the other hand, you see all this circularity and financing that I think concerns all of us. And then all of us who kind of grew up during the sort of tech bubble era, we've kind of seen this movie before, and we don't want it to end the way that it ended back in 2000. And so there's a lot of push and pull and a lot of monitoring on a daily, weekly, quarterly basis. And I think that's why NVIDIA's earnings calls continue to be sort of the Super Bowl of, equity investors, calendars.
What about NVIDIA's valuation specifically? Do you feel comfortable with that?
It's trading at 28 times next year's numbers. It's growing revenue at 60%. It's growing earnings at 50+%. They're reasonable valuations. They are not astronomical like we saw during the tech bubble. However, it's still relatively expensive, and it all hinges upon the duration of this growth rate. Does this continue at these levels for 3-5 years? Or is it just this sort of near-term 12-month growth rate that we're seeing? And I think that's this anxious investor base that's sort of watching this. When does the growth rate start to deteriorate?
Well, according to Bloomberg analysis, if you're looking at what the general consensus is, by 2028, revenue growth is going to have slowed to 26%. Just in 2027, it will have slowed to 45%. But is that just the law of ever greater numbers? I mean, we're already almost a $5 trillion company. How can we expect it to keep growing at 60% out into 2028 and above?
And I think that's the thing, that's the skepticism that really sort of creeps into, the investor mindset, is that how large can this get? And the numbers, when you start to just grow at 60% plus year after year, it's just astronomical. And yet, Jensen's talking about $3 to $4 trillion of annual spend for data center and AI infrastructure. And if all of that, or a good portion of that, goes to Nvidia, the numbers continue to grow. And then, the hyperscalers will grow as well, because that benefits their cloud revenue. So it's just something that we continue to keep monitoring, and we'll have to see each quarter, not just from Nvidia, but from all of the tech ecosystem, in terms of how large this AI platform is going to become.
Okay, Yoshioka, it's always great to get your analysis from Wealth Enhancement Group. We thank you. Now, coming up, AI pioneer Yann LeCun. He's leaving Meta to launch his own startup. What's next for him, and what it says about Meta's own AI plans? That's next. This is Bloomberg Tech.
Yann LeCun, one of the so-called godfathers of AI, is leaving his role at Meta to launch his own startup. Rumors of his departure have been swirling for more than a week, and it comes as the social media giant makes big changes to its AI efforts, including forming a new AI lab earlier this summer and spending billions to hire new talent. Bloomberg's Kurt Wagner broke the story. Actually, after we published our report, Yann LeCun posted on LinkedIn referring to rumors and clarified a few things. But I guess let's start with why he's leaving, what he's doing, where he's going.
Yeah. So Yann LeCun is an AI researcher in sort of every sense of the term. He is looking at things on a very long time horizon. And as Meta has come into this sort of AI fight that we're seeing right now with OpenAI and Google and Anthropic, they have really started to focus their AI efforts on the here and now, right? On the chatbots, on the LLMs, the things that consumers are using today. And so LeCun's work is years, if not decades, sort of down the line. And what we had heard in our reporting is that because of Meta's focus, he was starting to have trouble getting the resources that he felt he needed in order to do his research. The focus was certainly on things that were not what he was paying attention to. And ultimately, Meta was going in a bit of a different direction, I think, on AI than what he envisioned. And so, as you mentioned, Ed, this was something that had been discussed and sort of talked about really since this summer when they started pivoting towards a super intelligence effort. And, they did try to leave on good terms. Meta is going to be sort of involved in some capacity in his new startup, but it was time for him to move on and do his research elsewhere.
Yeah, he describes it as advanced machine intelligence, more sensory information, more physical AI. In many ways, your story articulates how the tide moved against him, and certainly executives moved against him, because Alexander Wang came in and sort of superseded him.
Yeah, well, LeCun is a legend in the AI industry, right? He's considered a, quote, godfather of this entire field. And yet when Meta decided to build this new lab, the summer TBD lab, and go out and acquire, essentially, Alexander Wang from Scale AI, he became Yann LeCun's boss, right? I think he's more than 30 years younger, obviously very different type of expert in terms of AI. And so there was a feeling sort of in that moment where, okay, if they have this, legendary AI researcher in the building, and yet they're still going outside the company to bring in people to run their new AI effort, what is that signal, right, for Yann's future here? And I think, again, this was something that in some ways was a long time coming because of the fact that he is so forward and future looking with what he does. And Meta is fighting sort of for its AI life right here and now. But I think that layering of executives over the summer was probably another big reason that he's leaving today.
And a big supporter of open sourcing that perhaps Meta's shifted slightly away from as well. Bloomberg's Kurt Wagner, great breakdown. Thank you very much indeed. Meanwhile, coming up, we'll talk about the Chinese university shaping the country's AI sector and its future startup leaders. This is Bloomberg Tech. China's Tsinghua University, well, it's having an outsized impact on the country's AI industry and the school's professors and students. They've received more patents each year than MIT, Stanford, Princeton, Harvard combined. Let's go out to Bloomberg's executive tech editor, Peter Elstrom, for more on what this signifies about China's AI ambitions. They are wholly focused on making sure that they have many, many more experts and potential employees of the future.
Yeah, Tsinghua is a very prestigious university. For many years, it's educated the best and the brightest, especially in science and engineering in China. But what's really changing now is you're seeing this momentum in AI in particular. A couple things are feeding into that. First of all, DeepSeek. The success of DeepSeek and its breakthrough model earlier this year really gave a lot of confidence to these young students that they too could build businesses that would be very, very successful. In addition to that, Xi Jinping and the Communist Party have been calling on the tech sector in China to be able to build in a number of very key areas for them, strategically important areas for them, especially AI. So you can get government funding, you can get tax subsidies. There's a lot of momentum to be able to build businesses. So the students there feel like they have a lot more opportunities in front of them. Venture capitalists are coming, they're funding a lot of these businesses. We're seeing quite impressive AI startups coming out of Tsinghua and the rest of China.
Peter, as part of this Bloomberg Big Take, you look at the alumni that have gone away, founded key startups, but also those that have quite senior jobs at China's biggest technology companies. What are the best examples we need to know about?
Well, Tsinghua has put their graduates in a number of different places, including leading companies like Alibaba, which has done a lot of impressive work with the Gwen model, in particular, ByteDance, the parent company of TikTok. And they've founded startups like Jipu, which is another cutting-edge company there. And really what you're seeing is this mass of students. China graduates many more STEM graduates than the United States, and they have done that for many years. So you're seeing 3.5 million students at last count compared to 80,000 in the United States. So it's a big magnitude difference for them in particular, and now they're able to get this kind of funding to be able to build up their tech sector, and you're seeing these impressive startups come out of the country's technology opportunities. And universities like Tsinghua are also starting up their own incubators where students can get funding. They run a Shark Tank-like competition to be able to give these kids a chance to pitch their stories and possibly get funding for them too.
Bloomberg's Peter Elstrom, thank you very much on the latest Big Take. Actually, since we come to air on Bloomberg Tech, you see Nvidia kind of pairing some of its gains. We're up 1.7%, but way off session highs, and that's having an impact, of course, at the index level. Think about the NASDAQ 100 or the S&P 500, and from a weighting perspective, Nvidia is the top dog. So market's kind of losing a bit of steam. We're going to get back to that key Nvidia earnings forecast and help understand why some of the enthusiasm around AI and some of the concern around a bubble is dissipating a little bit. This is Bloomberg Tech. Welcome back to Bloomberg Tech. In markets, Nvidia is really off its session highs now, actually. In the last 30 minutes or so, we've gone from a gain of around 3%. We're now up 1.7%. But part of the story when that Nvidia print hit was some belief that the AI investment cycle has some staying power. You saw neo-clouds like CoreWeave really jump in after hours last night. Still up 3% on CoreWeave in the session, but had been much higher at one point. Jensen Huang name-checked quite a lot of model labs, and Google was included on that. Continues to be at record highs. Alphabet, parent company of Google. Although I keep reminding myself that Gemini 3, which we went over this week, was trained on TPUs. And of course, as part of that interview and part of the earnings call, Jensen Huang threw a bit of shade at some of the alternative to Nvidia's GPU offering.
Saying they keep on coming back, even when they're using rivals. Let's talk about Nvidia a bit more. Bloomberg US equities reporter Carmen Reinecke is here. And you had a great story, really talking about how much Nvidia was hinging on the rest of the market mood and it on Nvidia, talking about that basically we're anxious about AI spending. It seems as though it offered some, relief, rally, but why are we fading it?
Well, I mean, we're really seeing like so goes Nvidia, so goes the rest of the market. And you're right. This report was really overwhelmingly positive, and we did see a share spike sort of immediately after, popped in after hours. It was up this morning. It seemed to be broadening out into other AI names. But I think what we might be seeing now is just a little bit of fatigue. I spoke to at least one investor that said they were actually surprised and thought the move was quite muted for how good the report was. The revenue guidance was great, and then they even sort of doubled down in this $500 billion forecast and said they might do even better than that. That's hugely bullish and, shows that spending for AI is set to continue. So we could just be seeing some fatigue here, some shakeout. Nvidia shares are still up 40% this year, and overall the NASDAQ has done really well, and valuations are high, so we could just see a little bit of thrashing here because of that.
On the so goes Nvidia, so goes the market point, which corners of the technology sector did we see make moves, even though it's fading a bit now, because of Nvidia? And I guess I've been looking at the neo clouds, but it's broader than that.
Yeah, it was actually very broad-based. So we did see the neoclouds move, like you mentioned. CoreWeave, Nebius were up after hours, but we even saw, rival chip makers move. AMD was up, Broadcom was up, Marvell was up, Micron, the other hyperscalers, the Mag 7 names, so Meta, Alphabet, Microsoft, although I think that's dipped into the red just now, and Alphabet, closed at another record high yesterday and was extending those gains as well. So we did see some, broad-based moves that seem to be linked to AI optimism in those AI names, and just seeing a little bit of a turn there now.
Yeah, Micron's actually off by now 5%. I mean, it's had a phenomenal rally this year. Are we going to keep needing adrenaline hits to sustain, as we see more broadly investors tie up their books as we go into the market? What are some of the narratives that they're going to have to face, the AI trade versus the Fed versus rebalancing?
Well, you make such a good point, which that there are all these other macro backdrop things happening that are really important and are also weighing on the market. It's not just Nvidia as much as we're focused on that. So yes, they're going to need some AI reinvigoration. I think everybody's also really watching if we're going to get more cuts from the Fed. That's going to be really important. And I think that maybe optimism is a little dull for the end of the year. I've definitely heard people say that they're not expecting a Santa Claus rally, which we'll see. It would be kind of a sad Christmas without one, but it might be that just valuations are stretched. Investors are looking to take some of their profits into the end of the year and then see what 2026 brings.
Bloomberg's Carmen Roenicke, great to have you back on Bloomberg Tech. Thank you very much. Let's get some more Wall Street reaction to Nvidia's print. Joining us now, Ruben Roy, Stifel Applied Technology Analyst, a buy rating on Nvidia, maintaining a $250 price target. Let's start just with the outlook for the fiscal fourth quarter, around $65 billion. Depending on where you stood going into that is meaningfully above consensus to some. How do you react to that data point?
Yeah, the data point is that the slope of the spend is continuing to move higher. And I think that was a concern going into the print, especially after Jensen sort of let the cat out of the bag on how strong demand has been going with the $500 billion of backlog that he talked about at GTC back in October. And I think expectations because of that had increased going into expectations for the results for the October quarter as well as the guidance. And so, with the acceleration of revenue in both the October quarter versus July and then further acceleration into the January quarter, I think that took away, some of the concerns. And then, the commentary on the call, which I thought was very important, was that they're obviously taking more orders. And so I think you just talked about this, which is that there could be, there will be further upside to that $500 billion backlog as we think about 26. One of the things, in addition to the slope increasing, is that the runway here is increasing. So we get a lot of questions from investors around sustainability of the spend. Obviously, the hyperscalers have been increasing CapEx on a quarterly basis for quite a while right now. But these types of data points would suggest that the runway on the spend and the demand for AI compute continues to lengthen. And so I think those are very strong data points for the AI trade looking forward.
Ruben, just as you were speaking, Nvidia's gain is now just 0.9% in a session. I'm not saying that's your fault. That's just curious timing. The base case assumption is zero revenues from China. Jensen could not have been more clear about that. But does that not then give quite a lot of opportunity for some upside if they can get the China situation resolved?
Yeah, I think that's right. I think at some point it is likely that we'll see companies like Nvidia and potentially AMD and others figure out ways to work with both governments. The company talked about this on the call last night, but to your point, even without China, and this came up on last quarter. I mean, they had a beat and another raise without any H20 assumptions in the guidance. But even without that, you do have what I mentioned, which is the hyperscale capex going up, and I think something that is still not fully appreciated is the rate at which sovereign governments are spending on AI. So we talk about the 5 major hyperscalers in the United States and the capex budgets that are growing there. But Nvidia is doing quite a bit of growth in sovereign nation AI deployments, and I think that that's something that's going to continue as well. So even without China, obviously there's a big demand backdrop here, and like I said, that backdrop is extending into sort of a multi-year investment cycle.
Jensen and the company more broadly really spelled out again, they own 90% of the AI accelerator market, or the data center market. Is that going to change? You just referenced AMD.
Yeah, I think at some point you will see just if for nothing else capacity that Nvidia can bring to the table could enable others to participate here. The hyperscalers obviously have their own ASIC platforms that they're trying to bring to the market. But I think the way to think about this is that the overall TAM assumptions continue to rise, right? So a year ago or so, we were talking about multiple hundreds of billions of dollars in potential AI compute TAM. And now we're talking about trillions of dollars, right? So Nvidia's talked about $1 to $3 trillion. AMD had an analyst meeting just a few weeks ago where they talked about $1 trillion TAM as you get out to the end of the decade. And as that TAM increases, even if Nvidia's share comes down, which it likely will, I think this concept of all boats rise. They're going to continue to grow revenue in our view. Just on the overall TAM assumption increasing.
Ruben Roy of Stifel, great to have your analysis on the show. Thank you very much indeed. This is, the market continues to fade, but we've got some more earnings for you next. Palo Alto Networks CEO joining us to discuss the report, the latest acquisition. That's next. This is Bloomberg Tech. Let's dig into earnings a little bit more now, but this time it's Palo Alto Networks, a cybersecurity firm reporting 16% increase in revenue. That was yesterday, but it also announced a $3.4 billion plan to acquire Chronosphere. It's a boost to its AI-enabled cybersecurity offerings. Palo Alto Networks CEO Nikesh Arora joins us for more now. And look, your stock is lower because many are saying it's an M&A digestion risk that maybe is being faced here. You put $25 billion offer into CyberArk, now another M&A piece. Why does it work for you?
Well, Caroline, nice to see you. This is our 28th acquisition in about 7.5 years. And we've demonstrated to the market that we have been able to establish our business in adjacent markets over the last 7 years by paying attention to the market, looking at where the puck is going, understanding what is important for our customers. And I think Chronosphere, which is our latest acquisition, fits right bang smack in the middle of where the market's going. If you look at what you guys were talking about before this, you're talking about Nvidia, AMD. Eventually, all this compute power is going to result in people building faster and more relevant applications to the end consumer or enterprises. All those applications have to be observed and make sure they don't have problems or go down. And that's what Chronosphere does. It observes applications and infrastructure and makes sure you have 99.9% uptime. And then we are going to combine that with our agentic capabilities to make sure agents will go fix that if they go down. So I think it's a phenomenal opportunity going forward. And it's fine. The stock will recover. I think investors are beginning to understand the story. It's all right.
I mean, RBC has an outperform price target 250, well above where you are. And they're saying, look, you're a top-tier software vendor seeing AI tailwinds as it grows ahead of industry peers. But how does observability take you into a whole new ecosystem? Look, you're now fighting Datadog, Dynatrace. Why is that the right total addressable market for you as well as security?
Look, observability is a space, as I said, as we get more and more AI deployed, we're going to need more and more real-time capability. Real-time capability in actions, real-time capability in applications. Real-time capabilities require 99.99% availability, which means you have to make sure your infrastructure is always up and running. If it has a problem, you should be able to fix it right away. Sort of similar to security. We also have to watch security on a constant basis, make sure if something happens, we fix it right away. So actually, over the last 10 or 15 years, if you look, there are companies who have tried to play in both spaces. And typically, they've ended up really well on one side, not the other. We've not made a foray into observability because we never thought we could build it organically. We don't have the skill set. But we went out looking for data pipelining. We found Chronosphere. Chronosphere has some of the best engineers in the space. Observability suffers from two problems. One, it's too expensive, and two, it doesn't scale well. Well, Chronosphere solved that problem. It is 2.5 times cheaper than anybody else on the market, and two, it can scale to gigawatt size in terms of what is needed from an AI perspective. So we think the time's right, the asset is right, and the opportunity is right.
Taken in aggregate, that is an astonishing amount of M&A. Is there any reason why you can't just keep going and keep using M&A as the tool to position the platform where you want it, Nikesh?
Look, in the last 7.5 years, I'd say 30% of our opportunity has been created by strategic and timely M&A. 70% of our opportunity has been on organic innovation as a company. Now, that's worked out really well for us. Even now, we've announced two big deals, CyberArk and Chronosphere. Collectively, we're going to spend slightly under $30 billion. But that gave us the confidence to increase our targets for ARR in FY30 by $5 billion. If I can go spend $30 billion and buy $5 billion of ARR 5 years from now, I do that every day.
Let's go back to the fundamentals of where you are already. RPO, in particular, remaining performance obligation growth. It was strong in the quarter just announced, but when you're pushing out to fiscal 2026, our own intelligence analysts just a little bit worried about the slowdown in growth. Are you worried about it?
You know, when I started 7.5 years ago, we were a $2 billion company. Well, RPO right now is $15.5 billion. We set a target of $20 billion in ARR. Those are big numbers. So I think part of what people fail to understand is absolute numbers get bigger and bigger. On the margin, growth rates change. But I think from a capability perspective, if we start doing $20 billion in ARR, we'll be generating $10 or $15 billion of free cash flow a year. That's a far cry from where we started at a few $100 million 7 years ago. So I think you have to look at it from a slightly multi-year perspective. From that perspective, we think we're well positioned. We think this is going to be the largest cybersecurity company in the world. And we have aspirations to take it and double or triple it from where we are.
Right now, any given technology company might use several dozen different tools across cyber and AI, right? And your pitch is you just put everything in one place, offer a suite of things in one place. Is that strategy working to convince software companies in particular that it's better to come to Palo Alto Networks than do business with a handful of different players?
Yes, of course, it is working. We call that platformization at Palo Alto. We continue to add 50 to 75 customers every quarter and sometimes more in about the fourth quarter. But I think more importantly, if you look at the evolution of technology, almost every industry vertical in technology has started that way from the application perspective. People had 15 or 20 different vendors that did the entire solutioning for CRM. Today, we see single vendors, platforms in CRM. Same thing in HR. When I used to work in programming 25 years ago, we used to have multiple applications that solved the problem. Today, there's one platform. Same thing in ITSM. I think the same thing is coming to cybersecurity. Cybersecurity is a 20-year-old industry. It usually takes 30, 35 years to build that platform capability in industries and make them become ubiquitous. So I think we're at the right place, right time. We are seeing that move towards platformization. If you look at what happened most recently, a few weeks ago, there was an attack using an AI LLM. That means right. AI was used by bad actors to go and attack customers, and they were able to do it in real time. You have to have real-time capability on your side to defend yourself. The only way to deliver real-time capability on your side is to not have a mess of 40 or 50 products. The idea is to have them all be consolidated, running on a singular data layer and building agents that go and defend you just the way bad actors are using agents to come attack you.
Nikesh, we just very briefly dropped into negative territory on the NASDAQ 100, having been up at 1.2.4%. And the story this morning when I woke up was that Nvidia's forecast, its print, was soothing fears that we have about an AI market bubble. This might be the last chance I get for a while, so I'm going to do it. Give me the Nikesh Arora call. Are we or are we not in an AI bubble?
Look, we are in an exuberant phase of AI. I think it is the fastest technology evolution we've seen in our lifetimes, and I don't think it's about to stop. You can see huge bets being made by almost everybody. I think there is a lot of promise. You are seeing the consumer case. I think we underestimate how much the entire consumer landscape is changing and is going to change in the next 24 months. The idea of having applications where we have to go do all the work ourselves is going to become arcane. You'll have agents that'll go book your Uber. We'll go get you your food from DoorDash. We'll book your airline ticket. We can all imagine a future like that. We all want a future like that. That's going to require significant amounts of compute at the edge. So I think from an infrastructure perspective, in history, we've never had a situation where we built infrastructure, it didn't get consumed, and we wanted more. So I don't think the infrastructure problem is a real problem. Whether the demand comes right away or it comes an year or two later, I think that time will tell. But from a demand, from a technology fit, we're there. From an AI perspective, enterprises are slightly lagging that consumer adoption, but I think they're actually working hard to get there. Every time we do some AI experimentation internally, we come back and say, wow, that is cool. I wish we could deploy that faster across the entire enterprise. So I think the demand's going to come. The timing is up to you guys. You guys follow that on a daily basis. We don't. We put our heads down and see, where am I going to be 3 to 5 years from now? How do I position Palo Alto Networks in that context? And are we going to plot our way there? And we think that AI opportunity is going to create explosive opportunity for almost every technology subsector and even cybersecurity.
Palo Alto Networks CEO Nikesh Arora, it's great to have you back on Bloomberg Tech. Thank you very much. Now, coming up, we'll have more on Nvidia as the company is set to get a global boost from Middle East deals for AI chips. We're going to get the house view from Bloomberg Intelligence next. This is Bloomberg Tech. The US has approved the sale of tens of thousands of AI chips to the UAE and Saudi Arabia, a move that could further cement Nvidia's global dominance. Bloomberg Intelligence senior analyst Kunjan Sabani writes, the US approval of Blackwell GPUs for Gulf nations, quote, is tangible proof of sovereign AI momentum. What we're trying to do, Kunjan, is take that $500 billion figure, which takes us through calendar 26, and find some upside. And you think it's in sovereign AI?
It is, and just for context, that $500 figure was already about 5 to 6% above consensus as of yesterday. This new deals that they announced, the 3 to 4 new deals, mostly on the sovereign, could add around billions of dollars on top of that if they were able to execute well and the supply keeps coming on.
And yet, shares are now down 0.3%. We're negative. We raised all of our gains on the day, and the NASDAQ follows suit. Why wasn't this enough to ease concerns, do you think? Was there anything left that you needed to hear, Kunjan?
Fundamentally, no. I mean, this was one of the more bullish quarters or earnings we have seen from Nvidia, not just in terms of the 3Q, 4Q numbers, which, by the way, they blew past the loftiest buy-side bogeys, but reaffirming the $500 billion target. The key point that people are missing is holding gross margin to mid-70s, even when wafer, HBM, packaging costs are all rising. If you're able to hold that and execute that, that speaks a lot about their pricing power.
I just want to play you a soundbite from Jensen Huang about Vera Rubin. Listen to this.
Billions of dollars, yeah. And so for our Vera Rubin system, a 1 gigawatt data center is probably something along the lines of 50 to 55. And NVIDIA's contribution is probably about 35 of that.
That cleared up some confusion for the sell side. Content, just to explain your view on it real quick.
Yeah, when you think about the total cost it takes to build a data center, I mean, we're talking about 50 to 60% just going to one company, taking up all that BOM, how important that is and what that moat speaks to. I don't think the debate around ASIC and GPU is going to go away, but this should give some investors key factual data points that despite we are going to see a future where companies will do risk management and vendor diversity and have ASICs or a second merchant supplier, but the dominant share will still go to NVIDIA.
Kunjan Sabani of Bloomberg Intelligence, we thank you. That does it for this edition of Bloomberg Tech. Ed, we are in negative territory to end the show.
Yeah, it's an astonishing turnaround in the first couple of hours of the session. The Nasdaq 100 now down 0.5 percentage point, Nvidia down 0.5 percentage point. That's worth a recap on the pod. You know where to find it. From New York and San Francisco, this is Bloomberg Tech.